Welcome to SF Commercial Property Conversations with Bruce Bean, where Bay Area investments meet expert insights. Get ready to unlock the strategies of commercial real estate success.
So today we have Todd Sulzinger with us, and Todd is in the financial world and works with companies to help them go through their financial process. So Todd, it's great to have you on. I'd just kind of be interested in how you got into this whole crazy wild world.
Yeah, thanks for having me on, Bruce. I went to San Jose State, got a degree in finance, and was working part-time for a networking hardware company when I was in school and graduated. And they said, "Hey, do you want to come work for us full time?" So I was very fortunate in that sense. It's oftentimes new graduates, it's sort of like really tough. You're out there looking for a job, and I had this really nice entree into being able to work there while I was in college, and then convert to full time after I graduated.
Yeah, that's fantastic. And so you've kind of been building from there, it sounds like.
Yep, exactly. Yeah, I spent like most of my career working for technology companies, networking hardware, business intelligence, medical device companies. Currently working for a defense tech company, and spent a couple of years working in Europe for one of the companies. Was
Oh,
fortunate
wow.
enough to get a job transfer over to the UK. So yeah, it's been a good run for sure.
So you also did a little bit of syndication in terms of real estate.
I did, yeah. After being in corporate finance for a long time, I started to read more about real estate and started investing personally. And I think like a lot of people think, oh, should I do something different? And I was able to take a couple of years off my outside of corporate finance and try to build up a syndication business. And ran that Blue Elm Investments for about 3 years. Purchased mobile home parks, RV parks, helped partner with some people on some larger apartment deals. After doing that for a few years, I was not able to get it to scale to be as big enough as I really needed to have it be really turn into a job that would have full-time income. So I still have a few of those syndications active, but went back into really what I know best and have the best experience in working in corporate finance.
So give us a clue. When a company calls you, what do you typically do when you go in?
Yeah, like the company I'm working for now had never really done budgets before. So, if somebody tried to say, "Hey, how are you doing against your plan? What are your targets for the number of people you're going to hire, or how much people are going to travel, or what your revenue is?" It was very, very high level. So that was one of the things I've done here and have done in other companies is really work with the managers to kind of sit down and say, "Okay, looking out over the next year, 2 years, 3 years, what's your hiring plan going to be like? How much those people are going to need to spend again for travel, trade shows, whatever it might be, and then look at the revenue plan and build that out, and kind of roll those up into financial statements that we can track against, and the companies can share with their board or share with investors that have substance behind them versus being more of a kind of a thumb in the air guesstimate at a real high level.
So budgeting, it sounds like, is kind of your specialty.
Yeah, I got into it at the first company I was working for, and when you work for companies in finance, you can kind of go in the path of doing more of the accounting, bookkeeping, going through audits, or you can kind of work more on the forward-looking planning and reporting side. And after doing both for several years at different companies, I just migrated towards the financial planning, which I find more interesting.
So I'm curious, just how far back do you typically try and go to develop an actual budget for an upcoming year?
What do you mean in terms of how far back we
Well,
would go?
do you look back at the income and expenses for the last year, the last 5 years? How's that typically work?
It does. It really depends on the size of the company. If the company is a little bit bigger, looking at historicals can make sense. But as a lot of times with startups that are growing really quickly, if you look at, I don't know, what the sales department looked like a year ago, and they only had 2 or 3 people scrapping to get business, and now they're 10, 12, or 15, they need to grow to be 25 or 30. In those cases, the historicals like aren't as relevant.
Yeah.
If it's a bigger company, then you can see trends and work from those. But sometimes when companies are growing really fast, looking at historicals is not super meaningful.
So then you have to look at kind of what the projections are.
Exactly right, and a lot of that is related to how much cash you have in the bank.
Hmm.
Most of the companies I've worked for are funded by VCs, and you've got a runway, right? You go out and you see news articles all the time about, hey, so and so company raised $50 million. It's like, okay, we got $50 million. How long are we going to make this last? And that's a lot of the planning is going through that process. And when you ask managers, who do you need to hire? How many people do you need? Like everybody says they need everything. And you roll everything up and you're like, wow, this $50 million is only going to last us 9 months. Okay. Back to the drawing board, everybody. Let's we got to
Yeah,
stretch
hello,
this
we
out
got
a
to
little
scale
bit.
back here a little bit.
Yeah,
Yeah.
exactly.
So it's all about the burn rate, right?
Yeah, that is it. Yeah, I was having a conversation today with our president talking about, okay, we need really let's really dig into our burn rate. How's that looking? And that's always a big issue. Boards ask about it, like new investors coming in ask about it. It's always super important.
Well, if you're a venture capital firm, a lot of times they don't like give you that 50 million right up front, right? They give it to you in tranches.
Um, it depends. Most companies I've worked for, we have received it all at one time.
Oh, wow.
Um, I guess cases and with the idea that maybe it's going to last you for a year to 18 months, and then if
Okay.
it looks like
Right.
you might run out or need more, and your investors are still happy, they might re-up. But yeah, I would say most situations I've been when we've raised money, we've received all the money up front.
So I'm curious when do you get involved in the solicitation of the funds from a venture company?
I've been not at this company. I've been at other companies where you've got those meetings with the venture capital companies, kind of making the presentation, making the pitch, showing the projection that we believe is where the company can go, what the right market fit is, how big the addressable market is.
So yeah, okay. So it just kind of depends on the company as to whether you're involved or not.
Exactly
Right.
right.
Yeah. So, well, it sounds like a very exciting world to be in. And defense is a big deal right now, right?
It is, yeah, and it's this company that I'm working at now was started by three Marines who were like on the front lines and were super frustrated that like things that they could do with their phone back home, they didn't have that kind of equipment technology like on the battlefield. And they're like, this is crazy. Why is that? Well, it's because it takes so long to procure things. There's stuff like bureaucracy and red tape, and technology changes so quickly. So they got out and decided to start a company to try to fix it. So that's kind of
Wow.
what this company does.
Wow. That sounds like a very potentially successful group.
Yeah, and it's interesting. It's all kind of like a lot of times people think about like defense spending is about like in the military or equipment. But a lot of times it's just they just don't have the right software tools to use, or we use Slack and email, and it's like, oh, they can't use that because it's not secure, and so you need to like find tools that are, and not every company wants to work with the Department of Defense because the bureaucracy can be so so difficult to work with. So our company is trying to break down some of those barriers to kind of get better technology into the hands of the military as soon as we can.
Oh, wow. That's very cool. So I'm curious if, as you're going along, do you occasionally invest in some of these companies?
Well, as an employee in a private company, typically you do get stock options. So in that way, there is an investment. Sometimes it works, sometimes it doesn't. This company I'm working for now is seems like they're on very solid footing. The first company I mentioned I worked for out of college, got great personal experience, but the company was private. I received stock options. When I left the company, I bought them. So I came out of pocket, bought shares in a private company,
Yeah.
and the company stayed private for about 30 years and almost went out of business. So there's shares that you think might have been worth millions of dollars, but worth I don't know 10,000, I think.
Oh boy.
So when
Yeah.
you invest, yeah, sometimes you invest a lot of time. Sometimes you actually invest in the stock, and sometimes they're winners, sometimes they're losers.
The world of finance all put together, no doubt.
Right.
Yeah. So that's very, very interesting. Well, if if a group wanted to get a hold of you, Todd, where would they go?
A good place to get a hold of me. I still, I said I still have a syndication business that I'm not actively finding deals and raising money for, but I have some existing syndications that I'm still running. So my company name that I do that through is Blue Elm Investments, and my email is Todd Todd at Blue Elm Investments. So, I always loved. I still, even though I'm not actively doing syndications and purchasing real estate as a group, I love the real estate as an asset class. Some of what I think about is like, okay, like once this company goes public, it's like, how am I going to convert some of that into, long-term real estate holds? Because I still think that real estate's a great wealth building tool.
Yeah. No, that's interesting. You're in the high tech world, but yet you still feel like, okay, investing in real estate is a nice, solid place to be.
Yeah, I totally think it is. I think about some of the like better investments have been like single family homes that I purchased, where like I'm sure many of your listeners know, it's like you only make a small-ish down payment, and then you have a tenant in there paying your mortgage, and over time, the value of the property goes up. You have a tenant paying down the mortgage, fixed debt. It multiplies pretty quickly.
Yeah. No, and you're coming out of the San Jose market where prices have kind of skyrocketed over the years.
Yeah, it makes it a hard place to invest for sure.
Yeah. Yeah. Very interesting market for sure. Well, let's be in touch. I think we should talk again maybe next spring and just see how the market is doing in your opinion there. We just went through the crazy election year here, election day, so to
Right,
speak.
right.
And so, any rate, we'll see how the things are kind of working in the next spring if that's you're open to that.
That sounds good. I'm hoping that cap rates can, catch up with interest rates. When I still look for potential commercial properties to buy, seeing those, I mean, in Silicon Valley, you'll see apartments in the like 3 and 4 cap range, which is, crazy. You can borrow at 6 or 7 and, at a 3 to 4 cap. So I'm
Yeah.
still hoping those are going to like align here sometime over the next 6 months.
Well, yeah, and that is a very interesting. Well, we should talk about that next spring because maybe it'll turn around, maybe not. It's hard to know.
Yeah,
There's
for sure.
still people out there buying like crazy, which doesn't quite make sense to me.
Yes, I know. It's hard to understand sometimes.
Yeah, yeah. Well, let's keep in touch. I appreciate your time.
Excellent. Yeah. Thanks, Bruce. It was a really good chat.
That's a wrap on today's journey through the SF commercial real estate scene. Ready to share your story? Visit sfcommercialconversations.com/guest. Your insights could lead the next conversation.